All right, hey y'all, back with some more career advice. As an engineer, it's a rewarding field because it's on the border between science and technology. So you get to experiment with your application of mathematics and physics with problem solving in the technology field, and it's a rewarding pursuit, engagement, if you may, that crosses the border between science, technology, and business. And the pay is good, honestly. I mean, you will have a living for yourself as an engineer. But what also can't be overlooked is the finance careers. So a lot of engineers will use their mathematical and analytical thinking to solve these problems and help find solutions in the finance world. So let me talk a little bit about that. I'm going to go into a little bit more depth about the finance aspect of business. And one thing that draws many people towards it is you're dealing with basically fundamentally at the common root cause, you're dealing with the sole identity of money and trade. So, like, the evolution of money was barter, coins and gold. Eventually, it transformed into notes, like banknotes, and then digital currency. So, at its very essence, you're dealing with the transaction from goods and services to dollars and gold. So, every time a good or a service is exchanged, uh, gold or a banknote is transferred over to the other party, and that's essentially what you're dealing with as a financial accountant or a financial officer, if you will. And it's very rewarding, but because since you have such long dedicated hours and you're always working with clients and high stakes players, the compensation is very well because you are working a lot of hours and you're very dedicated and ambitious. So, in order to provide for that ambition and accommodate that ambition, the salaries are often very, very high in the financial field. So let's get into a little bit more about how rewarding the financial career aspects often are. For example, things you should know in fundamentals are like interest rates, supply and demand, the value of labor, wages, recession, boom, bust cycles, the general flow of the economy, and how the public economy works, as well as if you're in the private sector, mergers and acquisitions, 10K forms, 10Q forms, mainly mergers and acquisitions, leveraged buyouts, financing, budgeting, raising capital. You're going to spend a lot of time raising funds. So you're going to, and these funds can be the range from medium to large size. For example, like a 20 million fund or a $20 billion fund. You will start off with like F1, F2, F3, which is Fund 1, Fund 2, Fund 3. And the first development cycle is raising the funds. So you go F1, F2, F3 from your investors and your stakeholders. And then you will put this money to work and you will invest it into businesses. You'll start doing your research. You'll start doing your planning. You'll start doing your operations, your traveling, and you will find where to best allocate this money in the form of an investment. But it's going to be a fund, so it's everybody's investment, and you gain a small percentage for your work in growing everybody's investment. So you will invest it into a company eventually in the private sector, or you could do it in the public space as well in the form of a hedge fund. So with the form of a private sector, like private equity, you will find businesses which you can uh, modify and enhance to provide ultimate returns for your fund. So you will work with directors, you will work with CEOs, you will work with management, you will work with basic high level operations of a business to improve performance and ultimately deliver results. And as these results happen, they will happen on different time frames between your funds. So after maybe a 5-year span or a 10-year span is the evolution of the fund. So when 5 years has passed or 10 years has passed, the fund comes to a conclusion, and you sell your positions and you dump the company, and the return you keep for yourself and the investors. So how well has this investment performed across all venues of businesses you tangled with? How well has that fund fruitioned? And based on your skills of money management, people management, solutions driven, processes and procedures, streamlining, and just overall business enhancements and productivity, and how well you succeed in this business venture is the results you will gain after 10 years of an investment from a fund, and your shareholders and your stakeholders get rewarded, and in turn you get more reputation, and you can get repeat clients and more recognition for future investments and investors. And then you could take your investment company further than that and become a public investment company. So you can get shareholders to privately invest in your funds, and you can get public stakeholders to publicly buy shares of your investment company, investment vehicle, whether you're a private equity or public hedge fund firm, into the public stock market. And now you got two forms of raising capital: selling stock and raising investment funds. And it's all about your expertise with money, and some tools you will use in your journey is financial statements, like income statements, sources of revenue, sales, taxes, earnings, costs of goods sold, materials costs, inventory, price per earnings, expected enterprise value per earnings before income tax, depreciation, amortization, volatility, risk assessment. There's a lot of risk assessment involved in determining decisions, so you will use a lot of risk adversity. Growth rates, return, rate of return, compounding rate of return. So if these metrics interest you, like, that's going to be your tool set that you will, yes, you got a lot of decision making in the business procedures, such as which companies to invest with, and where to allocate your funds and your shareholders' money, and how to deal with these stakeholders and company directors. You will need to give meetings and dinners and public speaking and arrangements and basically business ongoings. But you will need to work with all these financial literacy tools at your disposal. Like when I was in university, we made a discounted cash flow. It was an engineer that told us we got to get better at discounted cash flows, which is projecting sales and revenue over the next 10 years and how that would reflect into the stock price today. So you don't take today's value into consideration. You actually take 10 years ahead into today's consideration. And in that factor, you factor in future earnings, sales, and competitive advantages. So any moats or competitive intellectual practices that these companies have over their competitors and provide a competitive advantage for future opportunities and future growth, as well as future setbacks, so laws and maybe regulations that are limiting the potential revenue growth of certain sectors, and there are many sectors. So that's what it all comes down to in the end. And if all of this sounds enticing to you, then you have a very rewarding career, and you get to wear suits and speak with people and stakeholders, and go to office board meetings and dinners and travel a lot. And it's your basic career goals, And you got your institutions and your government as well. So you got your investment banks, brokerage, insurance, mortgage, credits, funds, private and public equity, merger and acquisition, capitalization, regulations, antitrust, free market competition, government, taxes, supplies, reserves, interest rates, debts, deficits, budgets, wages, unemployment, government bonds, accountability, quantitative easing, which is printing money for the economy to reduce inflation or recessions, exports, imports, tariffs, free trade, and yeah, and of course the stock market of the country. So the S&P 500, the Nasdaq, the Toronto Stock Exchange, the GDP, and the capital gains taxes on investing into these public collection of stocks of the entire country, foreign investments, if you may. And so you basically deal with all of this. Now you will pick a certain venue, like I said, maybe public hedge funds, mortgages, working in a bank, private equity, where you deal with mergers and acquisitions, and you're always dealing with stakeholders and revenue and sales and actual real profits, funds, investment vehicles, debt, equity, loans, real estate. There's many different venues you can put your financial literacy and ambition to the test, and it's a hard career. You need to go many hours, grinding and working. Sometimes oftentimes you work weekends as well, but the compensation is worth it. So you will have a living, and it's a career. So that's a little tidbit, if you may, about what I learned from university and Hollywood, The Big Short, and just basically being financially literate as an analytical thinker about the finance world. Now, I'm not a finance. I'm an engineer, so I chose the engineering route, and stuff like transformers, electric motors, radars, antennas, base stations, generators, transmission lines, microelectronics, computer hardware. That's the stuff I kind of focused in. But if you want to focus on the financial aspect of the business economy, then there's that route for you as well. Okay? So hopefully this was educational and it can help you with your future choices.